All right, good afternoon, everybody. Good morning to some of you, and thank you for joining us here today. My name is Bob Cain. I'm with ECI Software Solutions. I'm the business unit leader for our product Build Tools. Build Tools is a product that was developed by a builder for custom home builders and remodelers. It manages all of the job cost, project management services, and all communication throughout the process. Build Tools integrates directly with QuickBooks and Xero Accounting. And the reason why we're offering this webinar here today is because we want it to be educational. The success of our customers is largely based on their ability to be able to manage job costs and manage projects and tie their projects and job cost information together and really be able to utilize reports to run a successful business. So the majority of our customers do integrate their Build Tools environment with QuickBooks. So what we did is we did a little bit of a search in the industry, and we were able to find an expert to join us who will be our host for the afternoon here as we move forward. So today we have Diane Gilson. Diane has been in the industry for over 30 years. She's been a CPA for over 13 years. You can read her bio right on the side of the slide over here, but she is a multi-certified QuickBooks expert. And Diane focuses on the construction industry, specifically for custom builders and remodelers, which is our audience here today. So in this webinar, what you're going to learn is you're going to learn some job cost secrets. You'll have your 3 to 4 secrets to take home. The webinar will be recorded. And if you registered for this webinar, but you had to cut out early, or maybe even if you didn't attend the beginning part, you'll be listening to it afterwards, because we will be sending out an email later on with a link to the recording. So you'll also get those gifts in an email as well, which are the downloadable assets that Diane and her company have put together to really back up the content that she's going to go through here today. So without further ado, I'd like to go ahead and introduce Diane to go ahead and take us through the webinar. If you have questions as we go through this here today, feel free to put them in the questions chat, and I will be monitoring those. So Diane, thank you very much for joining us.
Thanks so much, Bob. I'm so happy to be here and excited to share some of these job cost secrets and different perspectives and how you can use job costing in your QuickBooks, as you know, using QuickBooks as your primary accounting system, but again, integrating with something like Build Tools, and how you can use all that information collaboratively to increase your profits. So we'll be talking about that. Now, are you able to see my screen right now?
Yep, looks great.
Okay, I'll tell you what, I'm going to turn off my camera to save some bandwidth and also give you a full screen view of the information we're going to be presenting.
All right, I'll join you. Thanks, Diane.
Okay, thanks a bunch. So here's our title, Job Costing Secrets, How to Dramatically Increase Your Profits Using the Magic of Job Costing Without Having to Add More Employees or sell more or work harder. So it's always fun to think about being able to make more money without a lot of extra work and extra people. So we're going to start out here and say, where are you in your job costing journey? So maybe you've heard that you need it. Maybe you're wondering about whether it's for you or not. Maybe you don't know how to set up a job costing system within your QuickBooks, or maybe you started but got bogged down. And maybe you're one of those people who feels like you're pretty good at job costing, but suspect there are some ways to use your results that you don't know about yet. So my goal for this web class is to help 2 kinds of people. Hopefully you're going to fall into one of these categories. If you're new to job costing, you'll learn why job costing can have a major impact on your profitability. But if you already use or think you understand job costing, we're going to explore new ways that you can optimize its value in your business and get even more value from it, so you can see even greater profits. Now, over the years, when it comes to seeing critical financial information, the traditional, what I call the dark ages way, is where you find out your company's results after your accountant prepares your tax return. That's the following year. Maybe, you know, if you're really good at it, March or April or September. And of course, this year, our tax deadlines got extended, so it might have been even later. And of course, that's long after you actually need them. And we've got our guy chasing the money bus here, which, losing out because you got there too late. So here's why that's hard. Is first of all, it's because you don't know whether you're making money or whether you're losing money in your company throughout the year when you're not job costing. You don't know whether you're making money or losing money on individual jobs. And without this information, you're working in the dark. What you really need is a scoreboard. You need to be able to see your score while the game is being played and after the fact so that you can debrief and figure out how to play the next game better. So this is happening over time, and you need to see exactly what's going on with different jobs as time progresses throughout. Okay, so the 3 secrets we're going to cover today. Secret number 1, how to quickly and dramatically increase your profitability with job costing without having to add more. And of course, now they're really hard to find people, sell more or work harder. And we're going to be doing some math as we go through that, but you don't have to get out your calculator. We'll have it out on the screen. Secret number 2 is that your outside bookkeeper and accountant isn't going to help you set up a true job costing system, and I'll explain why. And then secret number 3, the one thing you have to do to set up a successful job costing system in QuickBooks. So when I opened my own business, was in 94, okay, and started helping business owners do job costing, I realized that job costing displays those scores actually for any business. Of course, it's ideal for construction, but it's also great for manufacturing and service businesses. Now, as a business owner with job cost reports, you're going to be able to see which jobs make money, which jobs lose money, so that you can decide what to do about it. And you're going to see not only which specific jobs are most and least profitable, but you can also see which types of work are the most and least profitable. So let's just take a look at a very basic job costing layout, okay? And this is where we just say, well, I'm going to assign income and cost to each job based on accounts. So in this case, we're seeing revenue from a job of 50,000 less the cost of the job, which QuickBooks calls cost of goods sold. And it's not only just the goods and the materials, but it's all the related cost of production of getting that work performed, which in turn is leaving us with a gross profit. So you're seeing 50,000 revenue and COGS with a whole lot of different kinds of costs in here, your employee payroll, other employee related costs, your trade contractors, your materials, and then all those extra things like permits and rentals and so on. It's giving us this gross profit of 15,000, which in turn is a 30% profit margin. And profit margin is based on revenue, okay? And what I'm showing here does not include company overhead. So this is a really basic view of the concepts behind job costing. However, if we take a little bit deeper look, there's an even better way to quickly and dramatically increase your profitability, and that's when you start using items or cost codes within QuickBooks to assign income and cost to each job. And on this little report on the screen here, I know it's probably kind of tiny, but on the left side of this report, you're seeing a whole set of cost codes with headers and subtotals and so on for different job stages. This is what's going to let you compare your initial estimates of costs and revenue to what actually occurred on a much more detailed level than we saw on that prior screen. So this means that for your scorekeeping, you're going to be creating a feedback loop during and after the job. And that means that you can start zeroing in on and increasing your pricing accuracy. You can create your own financial database with this type of information because QuickBooks is going to be that database that holds this for you. And it means you're also going to be able to improve your processes and efficiency. So let's go look at an example. And one of the ways that you can use your gross profit information to achieve your gross profit target. Now, let's say your gross profit target is 25%. And I'm going to be using some sample numbers throughout here. And so let's start out with a series of 3 different jobs plus company overhead. So you're seeing, first of all, your not so great job, and the lines are the same across. So you're seeing your income less your cost of goods sold, your cost of production. And in this first job, we've got a gross profit of $50,000. We didn't lose anything, but it's coming in at a 10% gross profit margin, and our target's 25%. So we're a little low on that. Then we do have a winner coming in at 33.3% gross profit. Gosh, we want to find out who's managing that job. We want to hire more people like that, okay? And we're hitting a 33.3% gross profit margin. But then next to it, we've got that loser job with the black bar across the top. And we do have company overhead. That loser job, we lost 5,000. Our company overhead is sitting at about 19.5% of our income. And we're sitting over here with, in total, across those 3 jobs, a $50,000 loss. Okay, because the company has to pay that company overhead. So this particular company with these 3 jobs is not doing really well. And that winner, look, it's one of the lower priced. It's not close to that 500,000, but it had so much better gross profit margin. Now, let's see if we make a few changes. Let's say that we, next time out of the gate, that loser job, we're able to control exactly what's going on by monitoring throughout the job. Maybe we're doing a better job at pricing. We're keeping our costs in check, and we hit our 25% goal on that. Look at what that does to the entire company, okay? All of a sudden, we've gone from a negative 50,000 to a positive 5,000. Well, 5,000 isn't that great. It's only 0.5%, but it's sure a whole lot better than a $50,000 loss. Now, what happens if we can take that not so great job and turn around and get it to meet the 25% gross profit goal? Now we've got 2 hitting 25%. We've got our winner in the middle, and what we end up with is 8% on our bottom line. Now, 8%, I mean, industry standards lots of times for consultants say they like to hit 10%, but look at this. We've got $130,000 of profit increase. We've gone from 50,000 loss up to an $80,000 gain. So that's definitely a set of improvements. And by knowing what your gross profit target is and continually monitoring and managing what's going on throughout the jobs and as you plan jobs in the future, you can make a huge difference just by having the right information at your fingertips. So you're doing this through the magic of job costing. And it does seem kind of like magic, okay? So another thing that you can do with this information is you can look at what kinds of work you're doing. So I had a client who made a really big discovery when we started typing out the kinds of jobs and looking at the differences in the return. And in this case, and these are not his numbers, I can't share. Obviously, my client's confidential numbers are what they are. I would never share those with you, but he found a 10% difference. And so on his residential jobs, which was about 60% of his mix at the time, and then about 40% in commercial. And again, this wasn't his, I'm using this as an example, but if we had a company that was doing about a total of $2 million, okay, then what we're seeing is that the residential jobs here are about 10% higher in gross profit than the commercial jobs. So in this case, the current profit was sitting, if you look on the right-hand side of the screen, okay, we got a 21% gross profit margin. We had company overhead of about 17%, and now we're seeing a 4% current profit. Okay, now what if in the next year that shifts based on the type of work? We want more of our higher gross profit work and less of our lower gross profit work. Okay, well, when we do that, now we move up to a 23% gross profit margin, same company overhead, and we've moved our bottom line up to 6%. So that's an increase of 40,000. That's a 50% profit increase just by shifting our mix. And then if we go and say gosh, we don't even want any more of those commercial jobs. We're not going to advertise. We're just not going to do them. We're going to stick with our winners. We're going to work with residential. And now we're all the way over to basically doubling our current profit just by shifting our specific business mix. And of course, you do this through the knowledge that you gain with job costing. So shifting that business mix is another way that you can make some changes in your bottom line. So I'm going to ask you guys, did we have more labor cost? No. Did in any of these cases, did I show that we had to make more sales? Nope. Did we have to do any more work? Nope, shouldn't have had to have done any more work. Do we have any more company overhead? No, I didn't change that in any of those scenarios. But what we did have was job cost reports, and using those job cost reports to make a big difference. You're seeing a theme here. You do this through the magic of job costing. So let's go to another thing that a lot of people think. What happens lots of times is business owners go, well, if I want more profits, I just need to sell more. So I'm going to say, let's start with $1 million company. And in this case, they've got a 20% gross profit margin, and company overhead is pretty much the same as what we looked at earlier with that $1 million company. And in this case, we've only got a net profit of $5,000. So, well, what's going to happen if we increase our volume like 5%? Well, what you see here is that we've made a $10,000 change from what we initially had. So we're doing $50,000 more work. And with that gross profit margin, gosh, we've earned another 10,000. Well, you know, that's good, right? Well, what if we change our volume to 10%? We move it up by another 10%. Now we're doing $1.1 million, keeping the same gross profit margin. So now we've got 20,000. Okay, sounds good. But what if we want to increase our volume 50%? Do you see that company overhead expense line? See where I've circled and put pink around 195,000? Well, if you increase your volume 50%, you're likely going to have more going on with the company overhead expense, assuming company overhead are those extra people that you're going to have to hire to handle 50% more work. And you're probably not going to keep that company overhead at 195,000. It could go up as much as 100,000 because you have to have a bigger infrastructure and so on to support that increased volume. So the big problems with just sell more include when you sell more jobs to achieve a higher volume, you're going to add people. Okay, you got to do additional recruiting and interviewing and hiring and training and turnover. Okay, of course, if you've got more jobs and more people, it means as a company owner, you're going to have to work harder because you're going to have more management headaches that go along with having more people on staff. You're also going to have the increased overhead costs that I just talked about. You're going to have more sales and production and company cost increases, and you're going to have pressure to sell more. When you have that pressure that, oh gosh, we've got to sell more, it's more tempting to cut your margin. So you might not even be able to maintain that 20% profit margin. And of course, you all know the more jobs you take on, the more risk you're taking on. That you're going to get that one bad customer that's going to turn around and sue you or create all sorts of headaches. There's just always that risk in the background. So here's a phrase I heard. Somebody said, I just don't want to grow broke. And keep that in mind. You don't want to grow broke. And that's easy to do. You can see how those kinds of things can happen when you're not managing that growth. So instead, what I want to do is show you some alternatives to selling more. And I've just kind of repeated the things that we looked at the selling more with the margins. And although it looked like if we increased our volume 50%, that we'd have another 100,000 on our bottom line. In fact, you know, I've explained all the reasons that that's probably not going to happen. And you might even end up in a worse position than you did on the front end, depending upon what those extra costs are. So let's just say instead, we're using our information to figure out how to increase our gross profit margin. If we can find a way to change our cost of goods sold to a lower percentage of 75% instead of 80%, again, using these same numbers, now instead of a $200,000 gross profit, we have a $250,000 gross profit. And immediately we've made a change of $50,000 right there by being able to manage, understand, and modify and track our cost. We can find it's usually pretty easy for people to find ways that they can get that cost of goods or production cost down by 5%. So there's $50,000 just by using your numbers. And now that you have a higher gross profit margin, another way to think about it is, well, gosh, we're getting a whole lot more efficient and effective. Maybe we're starting to specialize a little bit. Maybe because of that, we can increase our price by, say, 5%. And if we can just increase our price by 5% and hold our cost of goods sold the same as what we started out at, okay, now we're up to a 23.8% gross profit margin, and that's a $50,000 change from where we started. So either one or both of those, you can decrease your cost 5% if you can find a way to do that, or increase your pricing by 5%. And of course, you do this through the magic of job costing. So you might be wondering, as company owners, they love to grow their companies. I want to grow my company. Are you saying I shouldn't do that? So let's look at a three-step combination. So I'm not saying you shouldn't grow your company, but let's look at doing it in this way instead. So let's say we start here, kind of like you saw on the previous screens. And so in this case, it's a pretty low net profit. And let's start out and decrease your cost by 5%, your COGS. Okay, so that's going to give you a $50,000 change. Then we turn around and we increase our prices by 5% after we've got all of our operations under control and so on. Bumping that price by 5% is very likely possible, particularly if you've chosen to focus on particular niches, as some people say, okay? So that's going to bump your margin up to 28.6%. All right, starting with the same numbers and then making these tweaks. Now that's an additional $50,000 worth of income. So now we've got $100,000 more on our bottom line than where we started. So we've gone from 5,000 to 105,000. Okay, in this case, with these numbers, that's a 20 times total change in the bottom line through the magic of job costing. Now, let's go look at the third step, and that is to increase your volume. Now, after you've got a good profit margin, now you can start bumping your volume up maybe just a bit, 5%, 10%. You might even be able to get away with as much as 20% without having a big change in your company overhead, but you would do it very slowly and carefully. In this case, now, by that extra volume, you're bringing it in at a higher gross profit percentage. So I know this is a lot of math, and you can get the slides and go through it. You can double check all the math if you want to. And of course, when you put different numbers in, the results are going to be different. But this is to kind of point out that start out and get your COGS under control. Then look at increasing your prices. And only then, when you've got a good profit margin, do you want to increase your volume, and do it carefully, okay? So here's what it looks like in a graph. In this case, we showed how you go from 20% to 25% to 28.5% gross profit margin. And here's a quote from Victoria Downing. I don't know if you know her, but she's the head of Remodelers Advantage. And I love this concept. Volume kills and profit thrills. So you want to go after profit as opposed necessarily to volume. And of course, through the magic of job costing. So Hopefully 2 or 3 days from now, you'll be able to say the magic of job costing to yourself over and over again. So we went through secret number 1, how job costing increases profits. So first of all, you can spot and eliminate future losers. You can shift your business mix. You can reduce your cost of goods sold, your production costs by, and I used 5% in the illustrations, or you can increase your prices by 5%, or you can do both of those. And then here's the caveat, maximize that gross profit before increasing volume. You want to do it carefully. You want to maintain your gross profit percentage and consider the impact of volume increases on company overhead. Sit down and project it all out and figure out what you want to get done, how much it's going to cost, and so on. So there might be a sweet spot where you just really don't have to increase your volume, and you can just not have to sell more or hire more people or do any more work and make a big difference in your bottom line. That's our whole idea behind the math on this. So the truth from our secret number 1 is that job costing is the fastest and the easiest and the best way to dramatically increase your profits without having to add more employees or sell more or work harder. Now, secret number 2. This is going to go pretty quickly, okay? You might feel that your CPA is going to let you know if there's something you need to do to run your company more efficiently or more profitably. In fact, your outside accountant and bookkeeper isn't going to help you set up a true job costing system, and here's why. And I'm going to tell you a quick story based on the years that I spent in public accounting. So what I learned was while I was working as a CPA, when I was performing audits and reviews, I saw that most of our clients just had bookkeepers with no outside resources to help set up their internal system. Everybody was trying really hard, but they weren't properly trained. They were doing basic data entry and they did it based on what the prior bookkeeper maybe passed along to them if they did have any crossover. They'd say, well, we'd ask maybe, why are you doing it this particular way? And they'd say, well, that's the way I was taught. Okay, and that's totally understandable. Okay, so you can't change things that you don't, when you don't know what you don't know, you're just trying to do what was presented to you before. So we totally understood that. And we also found that owners had a high reliance on the year-end external auditors, if there were auditors being done, or the tax preparers to go fix their numbers. So the other thing that I saw while I was earning that license in the day, to make things worse, because they needed good internal information or better than maybe what they were seeing, they'd try to recreate the wheel by building their own makeshift systems. And so that would be spreadsheets and notebooks and card files and Post-its, etc. And so I've seen desks that looked worse than this when I was out working with different clients. In fact, all these systems created lots of extra busy work, and unfortunately, those subsystems were often wrong. And so it was not only a waste of time and money, but lots of times they would end up with bad information, which would lead to bad decisions. And unfortunately, we could not train them or help them fix their systems. Most people don't realize this, but independent accountants who are performing audits and reviews can make limited, what's called material dollar amount entries. So if they find something that's large in relationship to the company, they can make those entries, but they're prohibited from helping clients set up their internal financial systems. And why? Well, because CPAs are required to be independent. They can't ethically audit or review their own work and still remain independent. So why aren't they going to help you do that in addition to what I just talked about? Well, here are all the kinds of things. I'm not going to read this. These are all the kinds of things that CPAs are dealing with. I'll let you go back through and read all that, but you don't see anywhere in there where they're setting up their clients' internal management and cost accounting systems. They've got their hands full. and they're typically just pretty inundated. Even when they prepare your taxes, they often don't look at your books as carefully as you might think or wish. So I'm just going to share, I have many stories of people that I've worked with that had been counting on their outside tax preparers to help them. And here's an example. So when we looked at the client's balance sheet, their workers' comp liability was too high by more than $86,000. And when the balance sheet is wrong, that means your profit and loss report is wrong as well. And ultimately, this client had more than $100,000 in correcting entries for the prior year, none of which were found by her tax preparer. And these errors happen over and over again. This was just an example. I'll have one more for you, but you're not going to want to find out when you go through an IRS audit, that you were $100,000 wrong on the information that got submitted to them with your taxes. Here's another story. While implementing their job costing system, one of my clients discovered more than $150,000 of cost from multiple years worth of old completed jobs that was still sitting in a work in process balance sheet account. The CPA did the taxes, but never discovered that error. So these were real costs, but they were hidden in the balance sheet. It meant the owner had missed out on claiming those costs in his prior year's tax returns. So he paid more in income taxes than he should have. So after finding the problem, the owner made the corrections, alerted his tax accountant, and eventually claimed the costs as deductions. But without the job costing system that revealed those costs lurking in the balance sheet, he would have missed out on those tax deductions. Easy for me to say, right? Okay, he might have missed out on those deductions. So keep it or flush it. It's up to you. So this leads us into our secret number 3, okay? And the truth is, if you want your own bulletproof job cost and management accounting system, it's up to you. Here's our Uncle Sam, okay? So unfortunately, there isn't anybody else out there in the world that's, really knowledgeable about job costing or about your company and how things work in your company. It's really going to be up to you to stay on top of those numbers, to understand them, manage them, and run your company by the numbers. The number one most important thing you can do to set up a successful job costing system in QuickBooks is be willing to learn. One of my friends came up with this phrase called head versus hammer. So you can either use your head or you can just go out and keep trying to work harder and harder out in the field. Okay, so I'm going to share with you the 3 primary elements of a good job costing system. And I set this up in a pyramid like this so that you can see the base. And these 3 key elements are absolutely necessary. Number 1, the basis on the bottom, our foundation, is to design the right structural foundation. That means your right chart of accounts, you need the right cost codes, you need to set up jobs in particular ways, you need to be able to get your payroll assigned out to jobs, and so on. This is all based on the structure. Secondly, you and your team need the appropriate training. So in order to get those job cost and construction specific entries and reports in place, you build on that structure, learn how to use the structure, very similar to doing a construction job, okay? And you probably want to not put untrained people out to do one of your construction jobs. And then month-end procedures in order to make sure you have accurate reports, kind of like that punch list that you do when you're out doing jobs. So you might be familiar with these, what we call 9 levels of knowledge, and it ranges everything from number 1 on the left-hand end, you don't know what you don't know, okay, all the way to the right-hand end of actual mastery and innovation and teaching. So you don't want to be in one of those first 3 areas. So exposure training is okay, but it's not going to give you what you need in order to run your company profitably. Exposure training would be, oh, here's what a balance sheet looks like. Here's what a profit and loss looks like. It ought to kind of look like this. And that lots of times happens in some of the general training courses. You don't get the deep level information that you may need for your company. Professional accountants generally sit in the 6 to 9 range over here. And so they go through formal training and then they become practitioners. They might specialize eventually, and then ultimately perhaps end up in the mastery area with innovation and teaching. And across the top, you'll see that I put about the number of hours, the estimated hours in each area. Where you want to be is here in the middle in sections 4 and 5, where you start getting some basic working knowledge in the 11 to 30 hour range, or experienced working knowledge by actually using reports and getting more familiar. That's where you really want to be. Okay, maybe you're thinking that you're too busy to work on your job cost system. I hear that regularly. Now, I'm just going to do some math here again. If you could earn an extra $100,000 per year with a good job cost and management information system, and let's say in year 1 you invest 30 hours in training, that means you're earning $3,333 per hour. In year 2, you don't have to put in quite as much time, but you're still doing some learning and you're starting to monitor and use your reports. So you're well and over the 5,500 an hour earnings. Okay. And in year 3, now maybe you only have to spend an hour a month, spread it out across your weeks and so on. And now you've bumped your earnings per hour up to $8,333 per hour. So if you can see this kind of return on your time, where might you want to put this in your business priorities list? And I'm going to guess it's probably number 1 at the top. So a few frequently asked questions. So sometimes I hear people say, I don't like working with numbers. My friends have even accused me of being number phobic. So the question is there really hope for me when it comes to job costing? And what I will say is that everything changes when the numbers are about your business. It's kind of like, your children are a whole lot more interesting than the neighbor's kids, right? So some people tell me they're just not good with numbers, but in reality, you use your numbers all the time. So multi-dimensional numbers apply to everything you're doing in your construction business. So design, estimating, quantities, measuring. You live and work with your numbers day in and day out. Accounting is just another number system that you can learn. Terminology is a little different, but you can pick it up. I have faith. So what kinds of changes would you expect to see in your business life when you've got a job costing and management control system or systems in place? And I could spend an hour on this slide, but I'm just going to start popping some of these things in. And you can go back in your slides and look at these and think about them a little bit later. These all are great outcomes from those systems. Now, sometimes people say my company's pretty small. Should I set up a job costing system now, or should I wait until my company's bigger? Well, if you really want to grow your company larger, you need to do this now. Why wait? Why do you want to wait to earn more profits? Or why do you want to wait to learn where you can be more profitable? So no point in waiting. Companies that don't know exactly where they're making money and where they're losing money are the ones that go out of business. Okay, so many businesses fail right on the front end, or pretty quickly on the front end. Now, if you're here, you're likely not in a failing business, but this is what can happen when you're not paying attention to your numbers, or when you end up growing broke, things spin out of control. Okay, now, some people say, yeah, I'm on the other end of the spectrum. My company's pretty big, 5, 10, 30 million. Will job costing work for bigger companies like mine? Yeah. As a company grows, the company owner can't be everywhere all the time, right? There are more details, and job costing becomes even more valuable for larger companies so they can track those details. So keeping an eye on 50 or 100 people versus 5 or 10, it becomes even more critical. And of course, we have the magic of multiples. So if you earn or learn how to save I had a client that learned how to save about $1,500 on each framing job that they were doing. And over the course of a year, that made a difference of about $187,000 by just being able to spot that one place where they were able to bring in a different contractor to handle the same quality job of framing. So they really got their investment back. And, we talked about what are the business aspects. So what kinds of changes would you expect to see in your personal life? Well, when you have a more profitable company, these are the good things that can happen for you. I'm just displaying these. Not going to read them to you, but you'll see that these all fit together. The business improvements and the personal life improvements are all part of a continuum and can create big changes in your personal life. Okay, another question. Can my office manager or spouse learn how to do job costing? The reality is anybody can learn how to do job costing. So as a company owner, you might want to be the first one to learn how it works, and that way you'll know what to watch for. And if you want to pass that job onto somebody else, you can do that. Or you might ask your bookkeeper to do the initial deep learning, but check back in with you as the owner regarding major decisions, such as which cost codes you want to track. So let me know in the questions area, do you think job costing could work for you? Okay, so you've got a questions pane in GoToMeeting. Do you think that all of these different approaches I showed you could actually increase your profits if you had those numbers at hand? Okay, and secret number 2, let me know, do you understand that your outside accountant and bookkeeper can't help you create a true job costing system, and why it's really up to you to do it? And do you also recognize from secret number 3 why you kind of need to become your own CFO? If you haven't gone out and hired a CFO, the job is going to come to you. And do you believe that if you're willing to learn, you can create your own bulletproof job costing system in QuickBooks? I have confidence you can do that. Okay. So, Bob, is it okay if I take a few minutes to provide a quick overview of our step-by-step QuickBooks job cost training?
I think that's a fantastic idea.
Okay, cool. Thank you. And I hope, now I just want to let people know I'm going to be telling you about something we have available in our company. And if you go, no, I don't want to hear about it, well then, gosh, I'm glad you were able to sit through this part of the presentation up till now. But if you're kind of curious about how you can get better at job costing, I'm going to go ahead and tell you a bit more about the programs we have available. Okay, so overall, we call this our Construction Accounting and Management Program. And this is, we have how you can take this on and do the whole job costing thing yourself using one of our 3 training programs. So we have option 1 that we call Essentials, which is very self-directed. We have option 2, which is more comprehensive with additional information. And we have option number 3, which we call VIP, or our guided program. So with all 3 of those options, you get videos, you get PDF handouts, you get procedures, you get spreadsheets, you get checklists, you get samples and examples. So all 3 of those, you get those things. But here are some of the differences. Oh, and here is take a quick look at this. This is an endorsement from one of the owners of a company that has signed up for our CAMP program. Okay, so let's talk about Camp Essentials, self-directed. It gives you instant access to 35 job cost and accounting classes. Now, on average, these are not 5-minute or 10-minute little itty-bitty classes. These are about an hour each, okay, on average. Now, some of them are 17 or 18 minutes, some of them are 2 hours. It depends on the topic, but on average, all of our classes run about an hour on average. Okay, you also get 30% discount on, we have a lot of other job cost support products, and we are also into a solution provider, so we can get you the best available pricing on QuickBooks software and services. The total value of all of these classes, now this is based on, we also sell classes individually, okay? But total value here is $7,036, and you can get this on a month-to-month basis subscription, or if you want to do the annual option, you get 2 free months, and that brings your monthly average down to about $147 a month. Okay, their second option is our comprehensive self-directed, and that includes everything in the essentials shown above, plus there are another 25 classes in advanced job costing and accounting. We also have 14 classes designed specifically for owners and financial managers. We also have some subscriber-only workshops, 11 of those, as well as we add up all these values here, comes to 13,506. Again, based on individual class and product prices. Now, the subscriber-only workshops, you can't even buy those, but we did assign the value based on our other pricing structure. Month to month, that's going to run $197 a month, or again, annually, you get 2 free months, which brings your monthly average down to $164 a month. And another endorsement from one of our Camp Comprehensive subscribers. I'll let you read it. Okay, and then our third option, which is our Camp VIP Guided, which includes everything I've talked about up to this point. And additionally, in the Camp VIP Guided, that means you're getting more one-to-one assistance. So we have live monthly Q&A and coaching webinars. So when people let us know they've got questions, we address those. And then I'm normally also adding in some additional training in different aspects that may not be as covered within our regular camp classes, new things, etc. We also have a recordings vault where you can go out and search by topic. Those recordings all have transcripts, so you can find the information you need and save the time after the fact. Okay, we have an article resource center, so you can focus your research to find your specific answers. We also have our roadmap job cost planning product. This is going to let you set up the process of going through and setting up a job costing system. We've got so many classes that some people would like that guidance to do a step-by-step process and know exactly which classes based on their specific needs that they should take. And it also includes 30 minutes a month of one-to-one private coaching to get your questions answered. Okay, so you can opt in for that each month, and we work with you to get those questions answered. So that brings us up to a total value of over $18,000. And the VIP month to month runs $397 a month, or annually, again, 2 free months brings it down to $331 per month. Okay, so those are our 3 options. And if you're interested in looking at those, you can go out to buildyournumbers.com/get-camp-now. Now, if you click on that, it's not going to put you into the buy now. It's going to take you out to a page that gives you a whole lot more detail, all the different class titles and the benefits and so on, so that you can see that. Okay, so option 3, which is the VIP, option 2, which is the comprehensive self-directed, and the camp essentials. Okay, so we've to the point where you've got a couple choices and a risk-free money-back guarantee. So of course, if you do nothing, nothing's going to happen. And ask yourself what your cost of inaction is. And sometimes we call that the cost of chaos. We have little terms for all sorts of things here. Okay, choice number 2 might be to take a leap of faith and just test it out, see if it'll work for you. It's risk-free. We have a very generous guarantee. We just ask that you watch like 5 classes, and if you find out that's not for you, then let us know. No problem. We will refund your money. No questions asked, unless you want to tell us something, okay? But we'll happily refund your money if it's just not the right thing for you. Okay, so what's your next step? Is it worth investing a few hours to check it out? Go ahead, take a look. Okay, give it a try. And of course, even if it only does half of what I've shared and shown you in these videos, it'll more than pay for itself. So time range, if you can devote as few as 20 to 40 hours over the next 30, 60, 90 days, and of course you can take as long as you choose with the subscription program. So you can do self-paced at whatever you want. And of course, the nice thing about recordings on the recorded side is that you can go as quickly or as slowly as you'd like. If you don't get something, you can back it up and watch it. And on the other hand, you're going, oh, okay, I got it. We can go quickly. You can change the recording playback speed. So kind of a cool thing. Okay. We are within a couple of minutes of where I anticipated we would be. So we do have a spot for Q&A. And Bob, I'm going to hand it kind of back to you, and we'll chat about anything you would like to in our last few minutes.
All right. Well, thank you very much, Diane. That was great. You know, as ECI, we have a number of different products serving the construction industry, and we are true believers in education, and that's really why we wanted Diane to present the secrets of job costing in an easy to follow way. You know, we sign up hundreds of builders each year that jump onto our Build Tools platform. And I certainly can see the value in everything that Diane was talking about. I mean, when you think about from a remodeler or a custom home builder standpoint, you think about the communication that you need in regard to bids, tying them back to initial budgets, the communication that is needed to manage your change order process and the cost within those change orders, and the communication with your homeowners, the ability to keep track of your invoices and tie them back to the initial budgets. This is all a work in process, really, that involves finite focus, organization, and review. And then when these jobs come to a conclusion, when they're done, there should be really focused scrub exercises going through the jobs to understand where we went off track, understand where we won at the line item level. Think about the line item level as the invoices that come in. Think about those invoices that come in. That's the area that you're going to budget for, and that really relates back to the cost codes that we're talking about. So when you're doing that and you have that structure set up in QuickBooks, and then you jump on board with Build Tools, it's a matter of just syncing the cost codes together in an administrative screen, pushing a button, and now you're tracking it in your job cost and project management system, and it's flowing directly into and back from your QuickBooks system. So being able to really have this knowledge to understand how to get in front of the planning process to make sure that you're doing the right things job by job to make sure that you're maximizing those savings, controlling your cost of goods sold. That's really going to help you from a business perspective. And so we're really happy to be partnering here with Diane and in these best practices. We're big believers that our customers should continue to increase and improve their education in this area. That will help you to be more organized and to stay in business longer. And certainly would love to help anybody in regard to Build Tools as well. So in your handout section, Diane has listed a number of handouts out here that really support some of the concepts that she has gone through. And you also have a Build Tools brochure as well, so that you can learn more about Build Tools project management and best practices, and we're happy to help you in that area. So again, like Diane said, if anyone has any questions, just click on the questions pane and go ahead and send them in. So I'm gonna pull that up now real quick, Diane. One of the questions from a user in regard to the 5% in cost reduction, what are some of the most common areas of cost of goods sold that you see potential savings in? Is there anything that is common that you can report to us?
Well, one of the biggest risk areas you have has to do with payroll and with people knowing exactly what they should be doing. And of course, this comes from estimates and conveying that to staff, knowing exactly what they should be doing and being effective and efficient in what they're doing. And we run a particularly cool little spreadsheet where people estimate how much time they think they're losing on their from their employees, and it ranges usually in the range of anywhere between 15 minutes to an hour a day. And we monetize that and say, well, here's how much you're paying folks, and here's how much you're actually losing when they're wasting time, either through not knowing exactly what they should be doing or what the parameters are in terms of time estimates and goals and so on, or through errors and rework. And so that's one area that's really risky for people. And by putting a tracking system in place, if you've got employees on the payroll side, can make a huge difference. Those are some pretty big dollars that start flowing through on the employee side. So that's one really large area that you can hone in on and start using your results and start, tweaking and finding out, getting better on estimating the amount of time it takes to do certain things, and then holding people accountable for hitting those. That's probably the biggest dollar piece, but there are a number of other areas, finding places where you can maybe get discounts on materials, or if you pay at certain points in time, negotiating using purchase orders, okay, so that you don't work in the what I call the B bouts. So you go to the landscaper and say, how much is it going to run to take care of this property? And they say, oh, that'll be about 5,000. And then the bill comes in at 5,500. So you're probably not going to argue with a B bout, but if you got a purchase order that says 5,000, then you're in better shape. Those are a couple areas.
Great, great. Well, this is all great information, especially in the current economic times of rising prices, especially in commodity-based price areas, and the supply chain disruption, labor shortages. All of these are additional reasons that we really need to keep a good handle on our job cost. We need to be educated as business owners, business managers, and our staff, our teams. We really need to be doing the right things here as an industry so that we can continue to succeed. As the business seems easier to get, we really got to keep a close eye on the cogs. So take a look at what Diane has here to offer from an educational standpoint. Take a look at Build Tools as the leading provider in software solutions for custom builders and remodelers, developed from the ground up by a home builder in this specific industry, and now in place at hundreds and thousands of customers across North America, New Zealand, and Australia. So really appreciate your time today, Diane. Do you have any closing thoughts for the group here today?
Gosh, no, just if you get a chance, take the slides, take a look at them, think about how it can apply to your company and how you can just really maximize your systems to get you where you need to go. And I just also want to say so many thanks to Bob and Jenna for helping to set this up. I really appreciate the opportunity to present these ideas to your people, and anything I can do to help. If you come to buildyournumbers.com, you're going to find a lot of free resources and educational materials and other support tools and so on. So we're here to help.
Great, great. Well, we are right at the top of the hour, so thank you very much, everybody, for joining us here today. We really appreciate your time. So from myself, from Diane, and everyone at ECI, we really appreciate it. Have a great day, everybody.
Thanks so much. Bye-bye.